Good morning, Forex traders. This is Vance Williams out of the Seattle, Washington area here in the United States. Congratulations to our Seahawks, our football team, for winning the division yesterday. Also, congratulations to the Cowboys out there. You guys are looking pretty tough. Welcome to my morning Forex trading show. It's Monday, December 29th, the last Monday of 2014. I'll be here today and tomorrow, and then I'll take another mini vacation before getting ready for the new year on Sunday. I hope you all had a nice Christmas holiday. I'm not anticipating a lot of movement today, but I am anticipating a lot of movement in 2015, and we'll talk about that. To see more about what I'm talking about on this show, make sure when you press play on the player here, as you watch my screen, also press be part of the conversation right there. And this will give you access to to follow me on Twitter if you want to get these shows. I'm going to be giving a lot of great information every morning. You know, what the fundamental sentiment is, where price is likely to go, what we're seeing on the charts. If you learn to follow what I'm saying, it'll help you with your trading a lot. Also, you can go to my website here at forexartofwar.com, and there you can actually get my free books. We've had tens of thousands of downloads of these. People love this. 8 things they don't tell Forex traders. It'll tell you why. It'll basically show you which way you don't want to go in Forex trading. Because trust me, you can waste years thinking you're doing the right thing, and you really haven't done much at all. It happens to thousands of people all the time. Also, check out my training options. Just want to let you know, guys, I'm a coach. Most everything you'll find out there in Forex is you listening to someone else. Okay, that's great. You need the right education, but coaching and training has to do with someone like me watching you. And you'll find it quite rare that someone is actually watching you trade versus you watching them trade. And, if you look at real life, whether you're trading to box or you're trading to hit baseball, you can read 1,000 books on hitting a baseball and still not even be much closer at all to actually hitting one. So it all begins when you begin your training. And so I just wanted to emphasize that that's what I do. And if you have any questions, write to me. We have some affordable options. We're not really advertising much right now, so just write to me. Okay, so let's let's get out of there. Let's close that and bring up a chart. Quickly, I want to stress that what I do here is for educational purposes only. This is not intended as investment advice. You need full, complete skills in order to trade successfully. Even if I show you, I predict price movement correct over 90% of the time, which I do. You still have to know how to get in and get out, and that's not as easy as it sounds. You need those skills, that risk management assessment skill, and then you also need to train yourself to execute. That's basically like, training yourself to run into a burning building. If you don't have training, you won't know what to do. You'll just kind of go off of whatever you're feeling or thinking at the time. And anytime that there's a consequence involved with a choice, that's where, the risk gets elevated, and that's what we're dealing with. And we're just not trained for that in ordinary life. So you need to understand probabilities, in other words, price direction. You have to be able to manage your risk, and you have to be trained to execute well. So keep that in mind. Don't be thinking there's some simple shortcut to success in life. There isn't. Well, if there is a shortcut, it's here. It's just not what a lot of people think it is. And fundamentals today, just before Christmas, the Fed strengthened its intention to raise interest rates, which is expected to happen as early as this spring. Nary a word out of the Eurozone, which basically gave the go-ahead for the next leg down on the euro to 121.50. As you can see here, price reached basically within 15 pips of that level. So let's see what else. Oh, there's a bit more talk of rising rates out of the UK. As you know, I've remained a little bit neutral on the pound dollar trades because of that. So a little bit more is suggesting that they're going to follow right behind the United States. I'd like to learn a little bit more about, whether I'd like to see that validated a little bit. We're probably going to have less volatility ahead of the new year here. with the euro dollar already hitting close to that 120, 150 level, the market's a bit more likely to stay in a higher range before attempting a break lower. So that's kind of where we're at in fundamentals. The fundamentals, medium term, were down, but we've kind of hit that next leg bottom. Obviously, if you guys paused and just look at this screen for a minute, think about it. 120, 100 is right there, which is kind of we're really close to that. But the major psychological level is going to be 1.2000, so 1,2000. So if you're a major bank, for example, you're going to have to see some pretty strong impetus to think that we're going to go through that level. So that's what we're kind of watching for right now and I think that impetus to go through that level is going to come in 2015. I don't think it's going to happen now. As far as major bank trades this morning, there's only one major bank I saw taking trades this morning, and I'm not surprised. They're the most aggressive of the major banks. I'm not going to mention any names. I'm not quite sure about how to go about saying specifically JP Morgan or Credit Suisse or these guys, so I just kind of stay away from it. Saying the names, I do it in our member live trading area, but not here on this public area. But there's only one major bank trading. They're very, very aggressive. It's not unusual to see them, taking 4 or 5 trades in a day. And so I'm not that surprised to see them here while everybody else is on vacation. They're taking trades. With respect to 2015, we're anticipating more volatility and much more opportunity in the new year. That forecast is based on the perceived interest rate differential between central banks like the ECB there in the Eurozone and the Fed here in the United States. Volatility increases the frequency of trades, and a longer-term outlook for the markets creates even more trading opportunity. For example, when the path was cleared last week for the next leg down to 120, 150, that was an opportunity for what we call a medium-term trade. And some people ask, well, is that a week? Is that 2 weeks? Is that 500 pips? It's just the next leg down to 120, 150. If the market presents you an opportunity to get in at 120, 250, that's possibly 100 pips, possibly 1, 2, or 3 days to get there. If the volatility is much greater and it's correcting way up before we get that impetus for the next leg down, maybe you could get in at 124.50 before it heads down to 120, 150. That's a few hundred, and maybe that's a week or two, right? So there you just can't define it that way. We don't define it in terms of time or range. It's defined in terms of where it's going next and the timing of when that movement takes place. So just kind of take a couple notes there. Just keep following. If you keep following me, you'll start to understand. And okay, I'm not a fan yet. We do have longer term opening up. For example, it's been confirmed that long term, 2 to 4 years out, the Japanese economy is probably not doing very well. The Eurozone's probably not doing very well compared to the United States. So that gives us a view out about 2 to 4 years. I'm not a fan of trading long-term because long-term moves could take months, 3, 4, 5 months to complete. And, limiting your risk as you should. I mean, you might be looking at earning 0.25%, 0.5% a month trying to hold on and sit in that trade, so that's not great, right? But if you time out the medium-term entry, that's what I'm talking about, these next leg down. If you time those out and you have the right skills in place, it can be hugely profitable. So basically, you would be wanting to get in with precision into a trade that has a potential of 1-to-1 at 20 pips, but we get that go ahead for a next leg down, and you go ahead and hold that trade. That can be hugely profitable, and so that's what our traders will be targeting here in the new year. Okay, let's talk about the current buyer and seller behavior that we're seeing. Right now, I've got the euro sitting here. This is about a 54 pip range. You can tell from what I'm saying, I'm kind of leaning towards this correcting up a bit more. You can see it tried very hard at this bottom. I talked a little bit about why there's less strength to make a move down right now. Could just stay in this range today. It could break out and start moving up. There are some longer term sell positions, a few down here. So this is a likely area for stop losses as well for the sellers who are in these longer positions. So could get some movement above here if it breaks 122.21. So for our price logic trades, which is our extremely accurate types of trades, you guys will be looking for price to move above 122.21 right here. For a move lower, you need to get enough strength going below 21.67 here. Not really much more to say about that, actually. A pound is not looking much different. There's a range of about 44 pips. And it did dip down, kind of establish the bottom of this range here. That's not a big range, 44 pips for the pound. Again, I'm kind of leaning towards this movement up here now, kind of opposite of the medium term movement. But the key level on the top that you want to look for a move above is 55.83, excuse me, and on the bottom, 55.39. So if it stretches out below here, you could have potentially a trade. If it stretches out above here, you could have potentially a trade here. So that's about it. For our members, I'll see you guys in our live trading room coming up in about 40 minutes. Again, you guys be sure to download my free ebooks right here. You'll learn a lot from that. And also write to me, Vance at forexartofwar.com. I'm really easy to find. I mean, you can probably search my name and email on the internet and find me. But I mean, there's just tons of places. Contact right there. But do write me a question. And, if I don't write you back, I'll at least cover the question on the show. But I generally take time to write back to everyone. So that's about it. Thank you, everyone. I hope you got just a little something out of the session this morning. Have a great one. Cheers.